Good morning, everybody. Welcome to the Premarket Prep session for July 26th, 2023. July coming to a close here. And I couldn't be more excited as we approach my birth month, August, the month of champions. I'm Adam Holland, your host, stock options expert and expert market strategist, and we're here to do the same thing we are every single day, and that is get here that will lead to you being consistently profitable here across these crazy markets. We got an action-packed week this week, big earnings last night. We've got big data dropping here today. So a lot going on, but of course, we'll make sure to go over it all and keep you on top of things. Let's see what we got going on here, what we got happening. Yeah, I went and tried to start the stream from the lobby that I was already in, and it just closed down and made me restart it. So we're starting the stream here fresh. Top news that we got is, of course, Powell, the Federal Reserve, all that good stuff. We got a Fed day today, and we've got one, with what we expect to be more action than the last one was, right? So top news, we got things kind of bubbling over here as we got the bubbles going in the background. Top news being sooner or later. So the Federal Reserve's policy setting arm is widely expected to boost its key rate by 25 basis points today as the central bank slows its pace of tightening. What comes next is up for debate, but Fed Chair Jerome Powell offered some insight into his thinking at last month's FOMC press conference and could do so again this afternoon at 2:30 p.m. Eastern Standard Time. So, flashback to June, quote, it's sort of standard thinking that monetary policy affects economic activity with long and variable lags. Of course, these days, financial conditions begin to tighten well in advance of actual rate hikes. So if you look back when we were lifting off, we started talking about lifting off by the time we had lifted off. The 2-year interest rate, which is a pretty good estimate of where monetary policy is going, had gone from 20 basis points to 200 basis points. So in that sense, tightening happens much sooner than it used to in a world where news was in newspapers and not, on the wire. So that's different. Let's see here, quote, but it's still the case that what you see is interest sensitive spending is affected very, very quickly. So housing and durable goods and things like that, but broader demand and spending and asset values and things like that, they just take longer. And you can pretty much find research to support whatever answer you would like on that. So there's not any certainty or agreement in the profession on how long it takes. It's one of the main reasons why it makes sense to go at a slightly more moderate pace. So any changes to this view today will be closely watched by markets. I hate also, by the way, like having to quote Powell. It is the worst just because of the way that he talks and like jumps around and stuff. I mean, I get it. I don't have his job, but it's the worst, like rereading his quotes. Any changes to this view today will be closely watched by markets, which will be hanging on to each one of Powell's words, as they always are. Trading in Fed fund futures anticipates that the Fed will stop raising rates after this meeting, with a 55.6% probability that the federal funds rate range will hold at 5.25 to 5.5% for the rest of the year, according to the CME FedWatch tool. There's also a 31.9% chance that the FOMC will increase again by 25 basis points. And some are betting that the rate will rise to 5.75 to 6%, giving that outcome a 4.8% probability. By contrast, the median dot on the FOMC's dot plot expects the rate to rise to 5.6% by year end. In terms of seeking alpha commentary, the data points to extraordinary resilience in the U.S. consumer and economy, suggesting a soft landing is increasingly likely. And this is likely the last hike in a brutal Fed hiking cycle, right? Seeking alpha analyst Christopher Robb. So, quote, one reason the Fed is likely to continue hiking is the desire to avoid the stop and go policy mistakes from the 1970s and early 1980s, counters Logan Kane. This is a valid concern. Then inflation came in several waves, and after each wave, the Fed would ease up, only for inflation to come roaring back. Very true, right? That's what Michael Burry's, kind of prediction was through all this. He was like, hey, I think the Fed is going to be too soft. They're not going to do what they need to do. They're going to stop, kind of ease up, I guess, their grip on tightening, wrangling in inflation too early, and then it's going to come roaring back. And, Jay Powell took that personally. He was like, listen, bro, don't talk on me. You don't know me. Don't speak on my name. And, he's determined to kind of keep things steady. So we have, The FOMC meeting was yesterday. The notes of that meeting will be released today at 2:30 p.m. And then we've got Jerome Powell speaking 30 minutes after that. So a Fed day. We've experienced a number of those, right? You want to keep things light all this week. You want to have kept things light. Basically, you can get like pop in the morning sometimes and then chop into the afternoon as the market tries to get you sucked into positions. And then you wait in those positions all afternoon until the Fed minutes drop, and then the Fed minutes drop, and then they take you, through the spin cycle. So that's something that you want to be on the lookout again for today. In terms of levels and all that, make sure you have your key levels because the markets and the algos will likely ping pong back and forth between them. We don't have to get some crazy move up or some crazy move down. Again, we could really end up with not much of a move at all at the end of Fed days, and that's how they really put you through the ringer, right? Because people anticipate, I'm just going to get, I'm just going to get calls and puts, and I'm just going to, kind of see which one works out. But if we don't get any major move, which can happen, then both kind of end up down the drain. So in terms of tech news here, AI costs. Despite quarterly results that topped expectations, Microsoft fell 3.7% after hours on Tuesday as it forecasts aggressive AI spending that will weigh on its bottom line in the near term. So again, another, representation here of companies that can beat on the top and bottom line, right? You beating earnings has nothing to do with how the stock reacts afterward. It's always about the guidance call. So Microsoft, despite beating, fell almost 4%, right? Because they're going to be spending more on AI. Capital expenditures are expected to increase sequentially each quarter as Microsoft ramps up investments in its cloud infrastructure amid strong AI demand. Growth from our AI services will be gradual as Azure AI scales and our co-pilots reach general availability dates. CFO Amy Hood declared, adding that the impact will be weighted towards H2 fiscal year 24. Seeking Alpha Investing Group leaders also discussed the results with Michael Wiggins de Oliveira, saying much of the news was already priced in, while Bodan Kucheraiva, no idea, sorry Bodan, while Bodan warned against accumulating a long position at current levels. So in terms of tech news, accelerating growth, we continue in tech news. We had a number of Titans report yesterday. Thanks in part to strong advertising from Google Search, Alphabet gained around 7% after hours following a Q2 earnings report that beat top and bottom line expectations. The tech giant also expanded the role of Ruth Porat as the company seeks a CFO successor, and she reiterated that the focus is still on growing expenses slower than revenue in 2024. Those tuning into the earnings call heard Alphabet's number one innovation priority and referenced, quote, our continued leadership in AI, while investing group leader Jonathan Weber was quick to laud Alphabet's successful margin turnaround following the results. So, as you played earnings on Microsoft, I doubt that there was a move big enough, even if you shorted it, to pay. With Google, if you did play calls on Google, in the group, I called out some calls on Google 2 days ago. As a possible earnings play, we had, some big volume coming in on Google calls. They caught attention, and I was like, hey, listen, again, it's a crapshoot, but if you want to play, in the time running up to Google announcing or swing this through Google announcing, by all means, you can take it. So if you took those likely paid heavy coming into this morning. But again, earnings always a crapshoot, guys. Just make sure you remember that through and through, right? You got to be realistic with yourself, with the market, even when you're on the winning side. And that's what I always try to be. You never think things are sweet just because you came out on top or you came out with the win. You take that money, you say, thank you, sir. Then you keep it pushing, right? And you're right back in that humble spot the next day. In terms of financials, stronger together, the latest bank consolidation will see regional lender Bank of California, ticker BANC, acquire PacWest, ticker PACW, in an all-stock deal. The merger comes after PacWest, which took the spotlight during the regional bank crisis, disposed of certain assets to shore up its balance sheet. News of the merger, which will result in a combined company with around $36.1 billion in assets, helped push PACW up 32% before the bell today, while BANC rose 11%. Separately, PacWest posted weak Q2 results hurt by losses on loan sales, while Bank of California's earnings were largely in line with expectations. Now, in terms of today's markets, in Asia, Japan, we were flat. Hong Kong down 0.4%, China down 0.3%, India up 0.5%. The footy in London down 0.7%, Paris were down 1.9, Frankfurt down 0.9. The Dow down 0.2, S&P down 0.2, NASDAQ down 0.3, crude down 1%, gold down 0.5%, Bitcoin up 0.2% to 29,125. Let me see here what we got going on. Yeah, it looks like SPY is even lower than when this came out, probably down around 0.3. So again, the major averages, the major indexes, literally just doing whatever they want. We have not been trading the major indexes much the past 2 days. I've been giving analysis, but haven't really been indulging in them myself, more so playing individual names, which has worked out pretty well for the most part. Got paid heavy on oil on Monday. Then yesterday came in, tried to take a look at China, didn't really end up working out. Monday was definitely the day to do that. And, took some speculative. I know a few people took some speculative plays there on those Chinese tickers as they got news, about stimulus coming in. That didn't carry over into yesterday morning. So that was, you start off the morning like, okay, we got two possibilities. One didn't work out with Chinese tickers, but then oil, which we hit again right on the double and triple dips, ended up working out well in excess of the Chinese tickers not working out. So that's really what you want to always focus on there, is making sure that you've got bigger wins than losses, right? You can actually have the same amount of wins and losses, but if your losses are break even / down 20%, right? Or maybe you're getting out slightly green, and then the wins are 40%, 60%, 100%, right? Or well over 100% in case of what we did yesterday with oil. You can't be mad at it, right? That's how you get your account to consistently grow, keeping the wins larger, right, and the losses smaller. You don't necessarily have to have a ton of wins. You can have 5 wins and 5 losses, but if the 5 losses are 20% and the 5 wins are 100% over, you're still net growing your account a lot. So don't be scared of losses. They happen, right? People say, "Oh, what do I do if it, this didn't work out? What do I do? Close it. Take the L, right? Take the L. It happens, and then keep it pushing. And as long as you keep the L small, you're completely fine." In terms of today's economic calendar, let's see here: new home sales at 10 a.m., FOMC announcement at 2 p.m., and then Powell at 2:30. So that's what we got: FOMC at 2, Powell at 2:30. Those are going to be obviously the most important parts of the day, where a lot of the movement might hang on that. In terms of what else is happening, UPS signs tentative deal with Teamsters to avoid costly strike. Snap slides 17% on gloomy forecast amid a platform rehaul. Guys, I forget this every time, but and I just wanted to have checked the calendar, but I just always forget. Every single time there's earnings, Snap tanks. You could just go and put 10K on Snap puts legitimately every earnings season, and you'd bank and probably just be fine not doing anything until the next earnings season. So let's make sure. I always say this, but if there's Snap earnings, somebody just remind me. Let your boy know. Throw it in the calendar, and because I just seem to always miss it, but they also seem to always miss it. They miss nonstop. Throw a 7 in the chat if you've ever heard me talk about Snap missing earnings and tanking. They're guaranteed to miss earnings and tank. They are legitimately the worst social network. They absolutely freaking suck, and they don't do anything about it. Right? They just continue to suck. They introduced an AI chatbot that did absolutely nothing but spy on people and tell them that it wasn't spying on people. They tank every single earnings season. So let's see here. Ad business, AI to be catalyst for Meta's Q2 earnings. Wells Fargo, ticker WFC, raises dividend, authorizes $30 billion buyback. RTX plunges after disclosing Pratt & Whitney engine defect. Dish to sell mobile service on Amazon by end of week. Historic tightening, UBS looks back at 3 ways the Fed messed up. Teladoc, ticker TDOC, climbs 6% as improved margins drive Q2 earnings beat. And then Magellan, CEO, is confident that sale to Oniok will prevail. And then Visa, 3M, GE, and GM earnings discussed on Wall Street Lunch podcast. So that'll put a bow on it, wrap us up, and take us out for the pre-market prep session of July 26, 2023. As always, if you got anything valuable from this session, just show love to the account. Their Instagram reels posted each and every day for free, continuing education that costs you nothing, right? So go over there, show love to those. If you love being a part of the community, you get value out of it. That's all that I ask. And also share it with people, right? Friends don't let friends stay broke. Tell them about the pre-market prep session. Tell them about this community, right, where you can come in and get great opportunities that you can leverage and use it to outsource your bills, right? Outsource your liabilities, right? All those things you pay for that don't appreciate in value. You can just go ahead and co-opt those with trading revenue. It's the most beautiful part of life, to be honest, is becoming aware of the market and its power, and then utilizing that consistently. Like, completely a cheat code, changes your life, and kind of is pretty wild when you think about it. Like, it's just money that you never see, but you just use to pay for things. It's like a video game. And it's a game that you can consistently win at if you have the right system and the right community. So everybody have a great rest of your day. Gonna hop in there and do my pre-market analysis now. See you back here tomorrow morning for our next pre-market prep session. Peace.